Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up slightly here, about 0.4%. I think market gapped up about 1%. As you can see, this is where it closed yesterday, and then we gapped up here. There were some volatilities in the first couple hours. You can see that that's the first hour, second hour. There were some fluctuations in that first couple hours. And then you can see that we hung around on the third hour, and then fourth hour it attempted to push higher, but that was that resistance level right here. You can see that was a prior resistance, and that's the same level where we talked about yesterday. That my oscillator, I tweet this out actually on that fourth hour today. When it was trading around at 313.14 there, but that was when it was hitting my oscillator. That's what I call oscillator resistance there, and we'll come back to it, but let's stick with the price action for now. But that's also obviously coinciding with that resistance, and we pulled back. So you have to say it's been, bulls are hanging around. We see the buyers hanging around, not letting get the price go down too much. Ever since we saw that steep decline, I think that was about 6-7% correction. Ever since then, bulls done a great job bringing it back up and letting the price hang around. And we talked about how in an overall bullish environment, it actually favors the buyers if you let them hang around like this, because bears perform the best when there's a minimal consolidation, right? Like this, something like the minimal consolidation, and then just kind of hang around. And obviously that was after about 17% rally from here to there. Right, so that was pretty extended, and then we saw that very, very sharp decline, and then we're just bulls are just hanging around. It seems as though, just looking at the last couple of weeks here, just this data right here, it seems as though bulls had multiple chances. You can see there was a big gap up here. There's some up move there. There's another gap up here. So we can see there was a gap up here. There was a gap up here. There was a gap up today. So there were 3 attempts to gap it up, right? And, obviously this was there's a sizable gap up. And I think that was about maybe less than 1%. Some of the around 1% gappers there. But every single time, it seems like when we see a gap up, we see a pullback. See a gap up, see a pullback. See a gap up, seeing a pullback right now in the last couple hours of trading today. Why is that? Because it seems like before, right? Seems like before, every time we see a gap up, it seems like, it continued to trend seem to continue higher. We may fade back down, but you continue to cultivate higher lows and higher highs here. We're not cultivating higher lows. We're not really cultivating higher, lower lows either. We're just kind of hanging around though. So it seems like we were seeing a gap up, but we haven't seen any kind of follow through after the gap up. That's kind of what I'm getting at. It's because this gap down right here, this island gap down. We've been talking ever since this gap was open. When this gap was open back in June 11th, and that island gap, and I colored it purple so you can see the presence of that gap there. And because of this gap down, and that gap wasn't fully filled, we filled almost halfway, and that's better than nothing. Bulls definitely filling halfway is better than nothing, but still it's open. And we talked about how back in June 11th that gap down is going to make things hectic for the buyers, because we're in an overall bullish environment in the long term. That's why you see these pops, you see these gap ups. we're not able to see any kind of strong follow through. We've seen that before. Usually when you see a gap up, you see a follow through after the gap up, but it's been gapping up, coming down, gapping up, coming down, gapping up, pulling back, right? That's why understanding overall environment, understanding what bears are working with, and I think all those things gonna help you in your strategy, right? Strategizing with your entries and exits and adding points and things like that, and managing risk, right? So anyway, yeah, I mean, I have to say it's been kind of a hectic environment because bulls were not really materialized from big up moves, but they're not wasted at the same time, if that makes sense. Because of these gap ups, right? We've been pretty much moving sideways. And it's been how long now, right? It's been, let's see, June 16th. So that's what? 1, 2, 3, 4, 5, 6, about a week, about 6 days of trading. We've been moving sideways. And that's a long time. That's a long time, right? And with that, you can see that my shorter term moving average is now, separating, right? You can see that they had a golden cross right here. You see that right there, that my short term and my mid-term moving average crossed to the upside. On this day, June 22nd, it looked like they're gonna cross back to the downside. It never did. We came and met right here, and we start separating. What does that mean when you start to see? So let's go back and track down the performance of when that happened. The variable is obviously after they cross back up. So it has to be after they cross back up, after, this thing came down, the short-term moving average. And then the short-term moving average started getting back up. And then we saw that bullish cross. And then they started to separate, right? And they tried it right here. It would start separating, but it never crossed back down. So in this case, what is the track record like? What is the performance like in the past? Let's go back to late March here. So right here, you can see they cross back up, and then they start to separate. You see that how that separation gets larger and larger, right? And that's when you see this short-term bullish momentum there, because you can see there were a gap. There were these downturns. There were these downturns. This was island top right there. That never really materialized though, and then we got right back up, and see how my short-term moving average kept acting support. Finally, we did bring it back down, and then it came down to retest at my mid-term moving average. But keep in mind, even though this thing brought it down, this short-term moving average and the mid-term moving average never crossed to the downside. That means the trend is still up. Right? So you can see that all the way through. And so we haven't really crossed back down this whole time. This is the reason why we'll come down briefly to retest at my midterm moving average, but it seems like every single time it seems to go right back up until back in May 13th, we did see right there, right? We did see those two moving at my short term, my mid-term, looking at 65-minute chart, because remember I told you guys I have different moving averages, represent different time frame in different charts, like daily chart, weekly chart, all that. Anyway, so on this 65-minute chart, my short-term moving average, my mid-term moving average, they crossed back up. And then it was pretty swift though. It was pretty swift move. Once they crossed back up, I think that was it. Once that thing crossed back up, look at that space in between that got larger and larger and larger and larger and larger. And we talked about this, how the market is preparing, going to second gear, third gear, and fourth gear when we saw the oscillator cultivating higher lows, right? So this is the first time where since the March lows, you can see that buyers are struggling. You can see that we did see the cross. We start to see a little bit of separation. You're still not able to really materialize. This is the first time since March lows. This is the first time. But why though, right? Why? Again, we did not see this kind of a, island top reversal gaps remaining open. A lot of times in the past, we did see some island reversal. It was closed quickly and then came down and then got right back up. That's why this gap needed to be closed maybe next day or so. But when it wasn't, ever since then, things starting to get hectic here, right? So I kind of presume that market is going to continue to be hectic until this gap is closed, which I've been saying the last couple of weeks here, right? But bulls are continuing to push higher because why? Because we're still in an overall bullish environment, right? That's why still, as of today, benefit of the Dow still goes to the buyers in the long term, right? That's my long-term moving average. In the midterm, because of this gap up today, and that gap still remains open, right? Not entirely filled, right? Let's be fair with the buyers too, because we were fair with the bears right here. This gap, we were fair with the bears here and here. We talked about back in June 11, the entire gap, remember that's where it closed, that's where it opened, there was a gap here. But that gap was not filled. There was about 3 attempts back in June 9th and June 10th here. That gap was not fully filled, and I said that's gonna make things a little bit hectic for the buyers. And then there was a big gap here, and then that gap wasn't fully filled. And we talked about how that's gonna make things hectic for the buyers also. So we were fair for bears. So let's be fair for the buyers, for the bulls at this point. That's not a big gap though, but keep in mind that was a pretty tiny gap too. Was not filled all the way, that's still open, and that's what made things hectic, at least for a couple days here before this thing really dropped. And here you can see we saw a gap up, bears brought it down, and as of today, as of now, bears were not able to fill this gap. That tells us that things could get hectic for the short term for the bears. Unless bears come down, fill it right away early tomorrow morning. And then that's going to act as support. And the bull's going to try to bring it up. The best case scenario is that there are too many supports here. We got that gap support. We got my short-term moving average hovering around in that vicinity. We got the mid-term moving average in there. And then that horizontal, that low support. So we got support 310. We got support 309. We got 307. But obviously this gap gets filled. It's gonna, high probability that gap is gonna act as support. Remember what happened? This gap was filled, right? And then that whole area acted as support there. So that gap gets filled, it's gonna act as support. So best bet will be just gapping it down, maybe turn this into another island. So we would have to see what happens tomorrow. But for now, with this gap up, as of today, as of at this moment, with the data that is at hand that I can see, right? I would give different label when it comes to short-term sentiment. I will give it short-term bearish if tomorrow we gap it down and it gets below 310 and start trading lower, below my short-term moving average. But because of this gap up, I want to give benefit of the doubt. As long as this gap is open, bullish today. Midterm, I'm kind of sticking with neutral, maybe neutral to bullish, but I'm sticking neutral right now because of in the midterm, because of this bearish island top reversal. That gap was not filled, still not filled. The longer this stays open, the more hectic it's gonna be. Bull's objective is gotta get up here as quickly as possible. The longer that thing stays open, it's gonna keep happening. We see a move and then just pull back, you know what I mean? So, and this whole entire area is gonna be acting as resistance. This is gonna be acting as resistance. The gap fill is gonna act as resistance. So that whole entire area is currently resistance, right? So long term, obviously, longer term, obviously bullish. My stance is bullish. Midterm, I'm leaning neutral to possibly bullish at this point. Maybe a little bit more bullish today because of this gap up that's still open. Today, as of now, short term, I'm turning bullish. because these two moving averages start to separate and the gap remains open. As of today, as of now, things can change. Tomorrow night we'll come back and that short-term sentiment can change, because short-term sentiment is going to change back and forth quite often. It'll be bullish, it'll be neutral, it'll be bearish, especially in this, volatile environment that we've been in the last couple weeks, right? So let's look at the oscillator here. So couple things happening in the oscillator. We have falling resistance on the oscillator here, here, here. And things were hectic those times here. Let's go back and kind of check here. Things were hectic a little bit there and then got hectic here, right? That was kind of a bearish divergence. You can see higher high, lower high. And then you can see right there came down. We saw a big gap up back in June 16th. And not able to materialize from it. We did not see a follow through to the upside. Why? My oscillator did have a little bit more room there to go, but hit with the downtrend resistance on the oscillator. It pulled back, price kind of moved sideways for a while, and then we saw a gap up today, right? But then my oscillator once again hitting that resistance. Last time we hit that resistance, things got a bit hectic there, at least for several days. We're back at it. Sometimes, these things can break out and kind of kill this resistance. As of today, it's no coincidence. It's no accident. Because yesterday, we just talked about this thing crossing up. Just yesterday. And we talked about how there's going to be a bounce. So every single time when we saw a cross, there's a bounce, right? We talked about that. Every single time there was a cross, there was a bounce. We talked about that yesterday, last night's video. You can go back and check. It's no coincidence. It's no mistake. We just got right there. Why? The market is so good at just making you guess, what is it going to be tomorrow? Why can't it give us something, just a clear signal like it's going up tomorrow? It doesn't. Every single day, it gives us just a little bit piece of information, and that's what we got to work with. And when you're analyzing, you always analyze what you see now with the data that is at hand. So we're just right at it. So are we going to come right back down? And with that, if we do see that, you're going to see this thing coming back down, right? And at least maybe retesting that, or maybe it's gonna kind of fill the gap and chop around, like, or something, you know what I mean? Something like that. If this thing does come back down, right? Or if market continues higher tomorrow, then you're gonna see this oscillator going back up, nullifying, neutralizing this downtrend resistance on this oscillator. Tomorrow, you can follow me at 2K Kim. And I will update you before I come out with the video, which I've done today, right? I'll update you guys on this oscillator on the price action earlier today, so you don't have to wait until the video. So you're wondering about this, where the oscillator is going to be. Are we calling down tomorrow first couple hours, or are we going back up? It will be better for the bulls for this to go back up to overbought level, to kill this, to neutralize this resistance there. One last thing before I let you guys go. Guess what we are forming right now? What? Because I can see bulls are working something again. Do you remember last time when we saw the oscillator start cultivating higher lows? What happened? We saw this market going from, in about 2 weeks, mid-May, till till early June, making 17% bullish run, right? You saw, remember you guys what happened at 275, 320, that run? It just happened in 2 weeks. And we kind of anticipated something like that. We talked about that, how this market is preparing to get into the second gear, third gear, right? That's up to when I saw my oscillator start cultivating higher lows, right? Well, we just cultivated higher low there. So if this thing does come down, it will be better though going up to this level and then coming down, because then you don't have to deal with this falling resistance, which we'll find out tomorrow. But this signal right here, you guys remember back in late May, when we saw that cultivation, we realized we're going to see some swift move to the upside as the market is shifting gear to go faster and faster. And when the market starts shifting, the volatility it reduces its volatility, right? You guys ever and this is exactly what I said back in mid-May. You ever driven a stick shift? First gear, second gear is a bit more jerky, right? That's kind of how what happens in a first, second gear. It's jerkier. But as you shift to third gear, fourth gear, fifth gear, it's less jerky, but the car goes faster. And that's exactly what we saw, that quick, very swift bullish move we saw. And again, we are seeing something like that, right? Market is preparing something. So it'll be very, very interesting if this market is getting ready for another move like this, where they'll get us to all-time high, maybe 340s, 333, feeling all these gaps here. So we'll come back. We'll follow up, and we'll re-examine, reassess the situation. Obviously, I'm seeing every single day. I'll give you guys an update on that oscillator, give you guys on the price action, also give you guys an update if this gap was filled or not, and then update on this gap, some of these moving averages separation, and the oscillator cultivation. All of that we're gonna be looking at together tomorrow, every single day. So we can see where the market is headed, right? So you guys enjoy your evening, and I'll come back for you guys tomorrow night, all right? Good luck trading tomorrow.